Okay, starting with the DAX here, from this low here, we can count 1, 2, 3, 4, and 5 up here for wave 1, and then an ABC back for wave 2. There is a case for putting wave 1 over here and wave 2 here as well, and then that would line up with the S&P 500, and in that case, we would have a smaller situation retracement happening. So from wave 2 here would count up as 1, 2, 3, 4, 5 up for wave 1, coming back for wave 2 here, so a shorter retracement. So yeah, a couple of things here, I guess, is that there will be good support around the 14,500, so it may just come back into around this level here for some type of ABC correction at this point. And yeah, so we'll just track it and get some feel of the size of it and those sorts of things. So on the where can we go to the 20 tick chart here? So this little move up here, we've been tracking a 3 4 1 2 3 4 1 2 3 4 5 for the top playing in there, and then just watching it roll over. Well, a bit more than watching it, we've looked at shorting it at that point, so we'll just go into this area here on 100 ticks and just pick up the count from that area. Let's just get a bit more data in here as well. So from that top area through here, we noted that we had 1 2 3 4 5 down here, so we were looking to short. We also, anyway, we had a short at this particular point. So I've lifted this up 1 degree of structure into blue rather than green, but there's 1 and 2 here, and then down here is 1 and 2 here as an A and a B, and 1 2 3 4 5 for the C wave here. So I'm assuming that we're just going to continue to the downside here with this, and a good reflection of this would be the US dollar here. So from the top here down to the bottom here, we're counting 5 waves. So the DAX and the euro and the pound and the FTSE are all the inverse of this particular move to the downside. And what we've been noticing here is we've had 5 waves to the upside here, which we can label as an A wave, a B wave, and a C wave here for that case, and then we could make new lows coming in, or we'll need to look at this move up, this 5 wave move up here as wave 1, and then we can look at put wave 1 here, so the A wave becomes wave 1, this will be wave 1 2, so we have a bigger A wave to the upside, so an A and a B and a C, so a bigger move to the upside. So I'm just still working this out and comparing it to different markets and trying to pull it in. We'll see, but in the meantime we counted 5 waves up here for wave A and then wave B, and we're pushing up there. Taking that little high out there helps that push to the upside. So on the intraday basis on the 2K here, we can look at this as 1 2 3 4 5 to the upside of wave A or wave 1, and then the B wave here for this move. But whatever happens for the US dollar, this particular move that we've got here in 5 waves will mirror itself over here, so we can expect the US dollar to go to 105 at minimum around this area through here. Yeah, so counting this to the upside here, we can count this in different ways. We could put wave 1 here if we wish, and we could also put another little wave 1 here. Whichever way, we should be pushing to the upside on that. So the mirror image of that would be looking at this to the downside as 1 and 2 and 1 and 2 here, and continuing to move lower. So we can also look to add to those short positions there. We can also put a stop in there that would send the whole, if you're short here and we put a stop here, then that would make the whole trade pretty much close to break even or slight profit at that point. So we've got 300 here, 15,000, 15,3 up here. So we've had our bounce at this point. We want that So when you go short here, obviously we want to see something nice and clean like this, the first low below the level. Now it can come back up above the level and give us that particular pattern too. This is the most common pattern. So we start from the bottom and go to here. If it goes back above the level, then you need to rinse and repeat. You start over here. So this little pattern in here will be the same as the larger pattern here. So in here we'll have this arrival, the reaction, the first low below the level. So the arrival, the reaction, the first low below the level, and then the ABC pattern that may or may not go back above the level again as well, like this one here may not go back above the level. Most of the time they do, so you kind of expect the worst and hope for the best. So this move that's come down through here with this green line, this will be like a little 5 waves here, so we don't need to chase that. That will be 1, 2. So there you'll see at some point you'll see some corrective rally here, some low being in place and then a corrective rally. Okay, so once that low's in there, then you can put that in there, and then a breach of that would put you to the downside, and then you can move your stop down on top of that particular low at that point. But just to protect those there in case we get a larger correction at this point, and if that goes smoothly, well then we'll see further downside on the DAX. So the FTSE is much the same as well, just starting to turn at this point. Now we can look at it as 1, 2, 3, 4, 5 to the upside, with wave 1 coming back for a wave 2, or we can look at it as wave 1 here and a 2 here, and then a smaller 1 and 2 at this point, giving us a tighter correction. So we'll be playing both of them out, and I'm just going to cut straight through to the 100 ticks on this and just come in around that top area here for that. So we just want to get in a bit more data for that top. So I might just move this across over to here and this here, and then we'll put this here for 1 and 2 here. Just tighten that up a little bit, see how that plays out. So yeah, what's going on here? We don't want that there, we want a smiley face. So I think that's 5 waves to this point, and here and here. So the same thing applies here. If you're going to short this, you want some sort of nice move down, and you want that retest coming into play, and then looking for that short at that point. But this is one of the last markets to turn, so it'd be one of the strongest. It looks like 1, 2, 3, 4, 5 here. So let's just tighten this up a little bit further then, shall we? That's if we do get a rally here, it will be an ABC pattern. So that becomes exposed, and then the second low here becomes exposed. So I'll leave it at that particular point. And that will, because if it goes back above here, then taking these shorts out here under that, because it looks like an impulse wave there, but that would be the way forward on that. And also the euro dollar. So with the euro dollar here, we've got the same 5 waves up as the US dollar to the downside, as you know. So just check on that. So this move up here from the 28th of December is this mirror image of this move here for that at the 28th of September. And we've got 5 waves up here so far. So that means that we'll have 5 waves down here so far. So in that case, we're looking at this possibly being an A wave and a B wave and a C wave. So we can possibly look at this being an A and a B and a C. A little bit hopeful, but otherwise we'll get this larger correction here and this larger correction coming in here as well for that. So I'm just going to cut through. It looks like we've got a 2K there, so I'll just do that. And yeah, so we can exactly the same as looking at the the dollar here in terms of just take that to 2K and look at that move to the upside here. So we've got that there as the A wave or wave 1 and ABC for the B wave, and now we're starting to head higher here. So this will be a mirror image here to the downside of wave A and then the B, and then 1 and 2, and possibly we could look at that in, it looks like 1 and 2 in there. Could probably put it like that. Let's just go to the 100 tick chart because we had some shorts on this. 5k should do it. 10k. Okay, 5k is good, 10k is good. So yeah, so down to the A wave here. We may need to relabel this wave 1 down here, by the way, and wave 2 over here. We don't know that just yet. I'll just have a look at the speed in which this travels down here. You know, if it's, this is the speed of this A wave here. So we'll see the speed of, currently it's like this. So we'll see the speed if it's slower or faster. That will help us understand if we're in a wave 3 or in a wave C at that point. So here we've got 5 waves to here, so 1 and 2 and 1, 2, 1, 2, 3, 4, 5, the third, fourth, fifth. We may be able to put that in there as 1, 2. It looks like, yeah, possibly have to really. So we can get a rally back into this space, so a retest of 107. That, let's just assume for a moment that it does that. It may not, because I can see that this whole, all of this could be a third wave, but the problem with that, then that's got to be the fourth, and the fourth spikes out the low of wave 1, so there's a problem there. But it does leave this low here exposed now if you look for a short trade, but that's an A and a B and 1, 2, 3, 4, 5, so it could be just a wave 4 and a push up. So I'm not quite sure how that's going to play out, but you know, in bear markets you short new lows, and in bull markets you can buy new highs, and you're pretty safe at doing that. And of course you can buy dips and those sorts of things, but currently it looks like the A wave, the B wave, 1, 2, 3, 4, 5 here, but I don't really trust spikes that much. But we should be able to go short under here, and if you're really keen, you should under that point there as well. Alrighty, I'll leave that there. I mean, the indices are the same as well within all of this. So the main takeaway with everything really is the US dollar, which is dominating the trend in the indices and commodity stocks and FX pairs. And because we've got 5 waves here, it means that we should see another 5 waves up here. And the fact that we've taken out this B wave here as an A and a B and a C, it forces it, now that it's taken that top out there, to force it to be an ABC pattern, or at least a corrective pattern at that point. And the other point here too, if it was going to be a corrective rally up here, it would be in 3 waves, so an A and a B and a C wave to here. But because it took out this top here, it's putting that into 5 waves. So we could go 1, 2, 3, 4, 5 here, and you know, put wave 1 up here if you like, and wave 2 back here, or we can build it up in as 1 and 2 and 1 and 2 and 1 and 2, but it doesn't really matter. Whichever way you want to look at it, it's telling us in Elliott terms that we'll need to go higher and take out that high. And if we're talking of corrections, which would be the minimum move, would be mirroring this wave A here to wave C, so 105 over here. So it's pretty much telling us that US dollar up, commodities, commodity stocks, anything in trade, anything out of the side of the US is affected by the US dollar because of trade. So that benefits some companies and it crucifies other companies. So you just need to know what you're working with at that time. But as far as the dollar is concerned, we should see it to the upside. Alrighty, that's that. I'll leave it at that. Thanks for tuning in. Cheers.